chapter 3, economics, right? Okay. Now, what's the question saying, right? The diagram shows the cost and revenue curves of a monopolist. Okay, which output will the firm produce if its aim is to maximize sales revenue, right? If it wants to maximize its sales revenue. Okay, perfect, perfect. So sales revenue is maximized, right? Sales revenue is maximized, Isha, when your marginal revenue is zero. So when the marginal revenue of the firm is zero, right? What does marginal revenue equal zero mean? So that means that you are not generating any additional revenue from the sale of the good. So when marginal revenue is zero, that means each additional unit of the good that you sell is generating zero revenue for you. And that is where the total revenue is maximum. So when marginal revenue is equals to zero, your total revenue is total revenue, your total revenue is maximum, right? Total revenue is maximum. That's what you need to remember. Now I'll take you back. Just a second, this is still a mess. So let me take you back to the picture and then you can tell me where is your marginal revenue zero, right? So in which case, at what point out of A, B, C, and D is the marginal revenue zero? When is the marginal revenue zero, right? At the point B. So is the answer B? Is the answer B to this question, right? Isha, did you get this? So when the marginal revenue is zero, when the marginal revenue is zero, what does marginal revenue means? Marginal revenue means the additional revenue that each additional unit of the good generates. So when each additional unit is going for zero revenue, I mean, technically you're selling it for free. When you're selling your each additional unit for free, that is when the total revenue is maximum. Yeah. Okay. Isha, can you hear me? Okay, perfect. So I was saying that when your marginal revenue is zero, this means that each additional unit is selling for free, right? That is when your total revenue is maximum. So when your marginal revenue is zero, and how do we know when the marginal revenue curves hits the x-axis, right? Because on the y-axis, you have positive values. When it hits the x-axis, that is where the marginal revenue is becoming zero at point B. So at this point, at this output level, your total revenue will be maximum. Got it? Always remember this. Okay, now the question says the table shows a firm's marginal cost, right? The average fixed cost of producing 5 units is $6. The average fixed cost of producing 5 units is $6. What is the total cost of producing 5 units? What is the total cost of producing 5 units? Right. Sales revenue and total revenue. Yes, that's the same thing. That's the same thing. But total quantity is different. So if it would have asked that what is the total, at what point is the total output, at what output is the total quantity sold is maximum. So that would be when the average revenue is hitting the x-axis. I repeat, right? So total revenue or sales revenue, that means the same thing. Here, the question was saying sales revenue. So whether you say total revenue, sales revenue, it means the same thing. But if the question would have asked the total quantity sold, at what point is the total quantity sold is maximized? So that is where the demand curve, what is the demand curve out of all these? AR. So average revenue shows you the demand curve. It is basically the demand curve. So when the demand curve touches the x-axis, that is the point where your total quantity is maximized, right? So total quantity is maximized. But otherwise, to answer your question, total revenue and sales revenue, those are the same things. Those are the same things. Confusion? Isha, is this clear? Right? Okay, perfect. Now the next question says, what is the total cost of producing 5 units? So what is the total cost of producing 5 units? That's simple. So 5, 6 are 30, and then you add up all the marginal cost. Okay, think about this. Read the question again. The table shows the firm's marginal cost, right? So producing the first unit costs you how much? Producing the first unit costs you $40. Second unit costs you $30. Third unit costs you $20. Fourth unit costs you $30, and fifth unit costs you $40. Okay. Now, when you add the marginal cost up, because it's saying what is the total cost of producing 5 units. So total cost, we know total cost is sum of fixed and variable cost. What is total cost made up of? Total cost is made up of your total cost is made up of, sorry, right? So your total cost is made up of fixed cost plus variable cost. So how do you find the variable cost? You find the variable cost by adding the marginal cost. So when you add the marginal cost, that is what will give you the variable cost, right? And then you add the fixed cost to that. Right? Now, going back to the question, have a look at this, right? Now, when you add all the marginal cost, right? When you add the marginal cost, right? So that will give you the variable cost. First, 40, 30, 20, how much does it make? 70, 90, 90 plus 30 is 120, 120 plus 40 is 160. 160 is your variable cost of producing 5 units. Total variable cost of producing 5 units, Isha, is $160. And then what is the fixed cost? Can you calculate the fixed cost from the information provided? Can you calculate the fixed cost? Right. How much is the fixed cost? How much is the fixed cost? So if average fixed cost of producing 5 units is $6, then the total fixed cost of producing 5 units will be how much? 6 5s are 30. 6 5 are 30. So 30 units is your fixed cost plus the variable cost, which was 160. So 160 plus 30 is 190. So the answer should be C. Is the answer C? Is the answer C? Right? ये बात आपको समझ में आई है, ईशा? Right? So what you are supposed to do is that you are supposed to calculate the total cost. Total cost we know is the sum of fixed cost and variable cost, right? Fixed cost आपको directly उन्होंने नहीं बताई भी, लेकिन उन्होंने आपको बताया है कि average fixed cost 5 units की $6 है. तो मतलब कि if we multiply quantity and the average fixed cost, that will give you the total fixed cost, right? Which makes it 30. Right, you have to add all the marginal cost. क्यों? क्योंकि वो आपसे पूछ रहा है, वो आपसे क्या पूछ रहा है? Total cost ना, तो पिछले यूनिट्स को भी ऐड करना पड़ेगा. पिछले यूनिट्स को भी ऐड करना पड़ेगा. Got it? Right? क्योंकि अगर वो किसी एक यूनिट का पूछता, अगर वो सिर्फ किसी एक यूनिट का पूछता कि व्हाट इज द मार्जिनल कॉस्ट ऑफ वो टोटल मार्जिनल कॉस्ट आपने निकालनी है, सिर्फ एक यूनिट की होती तो वो तो मार्जिनल कॉस्ट दी भी आपको, वन स्पेसिफिक यूनिट की मार्जिनल कॉस्ट आपको दी भी है, लेकिन टोटल वेरिएबल कॉस्ट आपने निकालनी है ना, ताकि आप टोटल कॉस्ट निकाल सकें. तो देन यू हैव टू ऐड अप ऑल द मार्जिनल कॉस्ट ऑफ ऑल द यूनिट्स. गॉट इट? ओके जी. Right. So that was the question that we discussed, right? So, ठीक है ईशा, इसमें और उस वाले क्वेश्चन में, right, इसमें लिखा हुआ है कि the worker is compelled to work at W wage rate. The worker is compelled to work at W wage rate. So area below wage and above supply वो Z है, below wage and above supply Z है. लेकिन इसमें से हम X क्यों माइनस कर रहे हैं? We are subtracting X from this because जो मार्केट वेज रेट होना चाहिए था जिस पे लोग काम करने के लिए तैयार हैं, जो मार्केट वेज होना चाहिए था जिस पे लोग काम करने के लिए तैयार हैं, that is the one over here. That's the one over here. Have a look at this. That's the one over here, right? So ये वाला जो area है, this X, this is the negative. This is basically the welfare that they could not receive. This is the welfare that they could not receive. So that's why your economic rent turns out to be Z minus X, right? So that's what you need to remember. Okay. Arbab, have you joined the class? Okay जी, ये भी हो गया. बाकी questions आपने मुझे भेजे हैं इसमें. Got it? Okay, perfect. So let's get started. An economy is experiencing economic growth. Okay. What will be the effect on its rate of inflation, level of unemployment and current account surplus? अगर economic growth हो रही है तो उसका क्या effect होगा inflation पे, unemployment पे, current account surplus पे? What do you think? That should be simple. Rate of inflation, unemployment should fall for sure. And rate of inflation should be slightly higher. Rate of inflation should be higher and current account surplus should also rise. Rate of inflation, we can't. Is the answer B? Right. Yeah, I was also thinking the same. Is the answer B? वैसे current account surplus को uncertain होना चाहिए, लेकिन yeah. Isha, what's the answer to this question? Right. Okay. Okay. Yeah. Because think about this. Unemployment has to be lower. So when there's more economic growth rate, this means that companies are producing more. To produce more, they need to hire more people. When they hire more people, unemployment falls. As simple as that. Rate of inflation kyun zyada hogi? Because think about it. When you're producing more, the demand, overall aggregate demand increases. When do you remember? You would remember that aggregate demand is made up of those 5 components: consumption, investment, government spending, exports, and imports, right? So when overall your aggregate demand is increasing, so that results in demand pull inflation, right? So inflation also increases. And with current account surplus, as Arbab said, right? As Arbab said, that when a country is producing more, most probably it will also be exporting more. It will also be exporting more. When you export more and you import less, overall your current account surplus will rise. Current account surplus will rise. Is it making sense, Isha? So more production, more need for labor. If businesses are setting up, they are requiring more labor, so unemployment falls. Similarly, when there is more spending, right? Economic growth में क्या होता है? लोगों की incomes increase होती हैं, incomes increase होती हैं, तो वो क्या करते हैं? They consume more, right? They consume more. Businesses are investing more. So CIG, जब ये सब कुछ increase करेगा, aggregate demand increase करेगी, when aggregate demand increases, that leads to your demand pull inflation, right? So that's why inflation is also higher when there is economic growth taking place, right? Or आप export भी ज़्यादा करेंगे, you will be producing goods that you will be exporting to other countries, so your current account surplus will also improve. Okay, the diagram shows the marginal cost, average variable cost, and average total cost curves of a profit maximizing firm in a perfectly competitive market. Okay, which market price would mean that the firm would operate in the short run but not in the long run? Which market price would mean the firm would operate in the short run but not in the long run? Okay. Okay. B. Is the answer B? Is the answer B? Okay, think about this. Let me explain you. Arbab and Nisha, have a look at this. So in short run, think about this. In short run, the objective of the firm is just to cover its, in short run, the objective of the firm is just to cover variable cost, right? A firm is just there to cover its variable cost, right? So firm is just there to cover its variable cost, right? Whereas in the long run, obviously, a firm is trying to cover total cost, right? Total, this is again a mess, right? So firm is trying to cover its total cost. Now think about this. Even if you're making a loss, why is this true, right? Now I'm explaining you that why in the short run, a firm is only trying to cover its variable cost, whereas in the long run, the firm is trying to cover its total cost, right? So in the short run, if you're making a loss, variable cost, obviously covering just the variable cost means it's a loss. But why are you doing that? Why are you still producing if you're just covering your variable cost? Because think about this. When you set up a new business, there is a lot of fixed cost involved. There's a lot of fixed cost involved, right? That includes rent. You have, hired some premises, and things like that, right? So the idea is that you cannot expect to cover your fixed cost in the short run. You cannot expect to cover your fixed cost in the short run. Students, are you following me? Right? So you do wait till the long run to cover your total cost. Short run में अगर आपको थोड़ा सा loss हो भी रहा है, मतलब कि variable cost क्या होती है? The cost that is directly associated with producing a product. So what is variable cost? Variable cost is the cost directly associated with producing a good. So as long as you're covering even the cost of production, you are good with it. Even if you're just covering your cost of producing a product, right? In the short run, you're good with it. However, in the long run, you have to make a profit, right? In the long run, you have to make a profit, and therefore you would want to make sure that you're covering your total cost, right? Now, coming back to the question, think about this, students. If the price level is P1, so P1 mein to neither you are covering your variable cost nor you are covering your total cost. So you will never operate on P1. If the price is P1, you are neither covering your variable cost, because what is the minimum variable cost, right? So the minimum variable cost is over here. Students, are you getting me? It's somewhere over here. So it's above P1, right? So P1 is the price where you will just exit the market. Why? Because you're not even covering your variable cost, which means that you're not even covering the cost of producing a good. You're not even covering the cost of producing the good. Arbab, can you see the picture? In the case of P2, P2 is above variable cost. P2 is above variable cost, but that is because what point you operate on, where the marginal cost is cutting with the ATC, where the marginal cost cuts the ATC or the AVC, that is the output level that you produce. That is the output level that you produce in perfectly competitive firm, right? Students, are you following me? So in perfectly competitive firm, where do you operate? Let me show this graph for you, because then I think it's getting a little confusing for you all. Okay, have a look at this, students. So in perfectly competitive market, your marginal cost graph is basically your supply curve. Your marginal cost graph is basically your supply curve. Now have a look at this. So this is your, let me draw this, right? So this is your average variable cost. This is your average variable cost, right? And then let's say this is your average total cost, right? And this is your average total cost. Any confusion about this? Average total cost. We got on this. Now, where is your marginal cost in all of this? Your marginal cost is passing like this. Your marginal cost, students, is passing like this, right? Now, this point, the marginal cost in perfectly competitive firm is basically the supply curve. So where would you want to produce in the short run? In the short run, where your marginal cost is cutting with your AVC, that is the minimum price that you need to have. That is the minimum price that you need to have in the short run to operate, because at least you are covering your how much? You're covering your average variable cost. And in the long run, where this cuts with your, right? Where this cuts with your ATC, right? So that is the long run output. That is the long run output. That was the short run output. And what is the minimum price that you need in the long run? In the long run, as I just said, that you will want to cover your total cost, right? So this is the price for the long run, and this was the price for your short run, right? Is this getting? And the price that was shown in the question, that was somewhere over here. So at this price level, P1, the blue line, you are covering your variable cost. You're covering your variable cost, right? Because this price P1 is greater than short run price, but you're not covering your long run. You're not covering your long run. Is it making sense? Students, is it simple? Okay. Now we'll move to the next question. We'll move to the next question, right? Okay. So this being said, okay, what makes it possible for the increase in real national output to exceed the increase in labor productivity? What makes it possible for the increase in real national output? What makes it possible for the increase in real national output to exceed the increase in labor productivity? Increase in employment, increase in the inflation rate, increase in the money supply, increase in total earnings. Okay, what makes it possible for the increase in real national output to exceed the increase in labor productivity? Increase in employment. Increase in inflation rate, increase in money supply, increase in total earnings. I mean, that's weird. The question is quite, I think it should be A. I don't know. Is the answer A or D? A. Okay. Okay. So Isha, so think about this. What is real national output? So real national output is basically the real GDP, real, right? Real national output, right? So GDP is national output, right? Which we call national income. And when we use the word real, this means it is accounted for inflation. Arbab, listen to this. So real output means that it has been accounted for. It has been accounted for inflation, right? Is making sense, right? So real output means it has been accounted for inflation, right? Okay. Now, if the inflation rate is increasing, if the inflation rate is increasing, right, then what it actually means is that your real output will decrease. Above, are you getting me? Because the real output has been accounted for inflation. So if the inflation rate of a country is increasing, your real output would increase. So that's why I said B would not be the answer, right? I mean, to be very honest, this question is not making much sense if the real GDP increases more than the labor productivity, right? What makes it possible? So it's asking for the explanation that why the real GDP, real output will increase more than labor productivity. So my best guess was that if you're hiring more people, students, think about this. When do you hire more people in an economy? You hire more people when there is more need for, like, there are more jobs opening up because there's more output being created. I repeat, think about this. When employment in a country increases, so employment in a country increases when there are more businesses setting up and those businesses have more need for labor so that the work can be executed and all that stuff. So when more labor will be hired, that would mean that your national GDP, your national income will increase. So that was my reasoning behind that. If employment is increasing, it would mean that there's more output being produced, and that is why it will result in increase in national output. But otherwise, I mean, the exact question that was being asked, to be very honest, I could not make much sense of it. Is it making sense? Right? So that was my reasoning, that if employment is increasing, that means that you are hiring more people. And when do you hire more people? When there's more output being produced. So real national GDP, real GDP will increase. But how is that related to labor productivity? I could not figure it out clearly. And inflation one would be incorrect, Arbab, because think about this. How do we calculate the real GDP, right? So do you remember we calculate the real formula? So real is basically real value of anything, real GDP, real salaries, right? Real value is equal to nominal value minus inflation, right? Now, if the inflation rate is increasing, automatically we know that your real value would decrease. If inflation is higher, right, we know your real value would be lower. So that's what I, that's how I guessed. That's how I guessed it. Right? Is it making sense? Okay. So, but there will be some weird questions like these. Okay. Next question. What is most likely to increase in the short run following a rise in economy's rate of inflation caused by a demand side shock? What is most likely to increase in the short run following a rise in the economy's rate of inflation caused by a demand side shock? The current account deficit and the balance of payment, the price of government bonds, the purchasing power of the currency, the rate of unemployment. The price of government bonds. Rise in the rate of inflation. I would say B. 29 is the answer. B. Isha. A. Makes sense. Sorry, my bad. The current account deficit on the balance of payments. The current account deficit on the balance of payments. Okay, think about this, students. Have a look at this. What was the question saying? The question was saying that due to supply side shock, right? Sorry, demand side shock. So demand side shock has resulted in higher rate of inflation, right? So demand side shock resulted in inflation, right? Now, what happens when there's inflation? That is what you were, because it was saying that what will happen in the short run, right? Okay. Now, the rate of unemployment, obviously not, right? When there's more inflation taking place and it's demand side shock. So what do we mean by demand side shock? When all of a sudden aggregate demand increases. So when all of a sudden aggregate demand increases. So when aggregate demand is increasing, that is basically what demand side shock is. And we have just discussed that with higher aggregate demand, what happens? The country's GPL. What is GPL? General price level. So countries' GPL, general price level, will increase, and that will result in higher prices and things like that. That will result in higher prices and things like that, right? We good on this? Okay. Now, with that happening, what is most likely to happen in the short run? That was the question, right? The rate of unemployment should not increase. In fact, it should decrease. The rate of unemployment should decrease. When there's more aggregate demand, I just explained you, businesses are hiring more people, they are producing more output. So the employment in the country will increase. So that can't be the answer. The purchasing power of the currency. Why is C incorrect? Why is C incorrect, students? So C is incorrect because think about this. When there's inflation taking place, your purchasing power of the currency doesn't increase. In fact, it decreases because now products are more expensive. Now products are more expensive. Is it making sense? The price of government bonds, I was thinking that perhaps that is correct because, but A makes more sense. How is A making more sense? What happens when your country's inflation rate is high? So when the inflation is higher in a country, right? That basically means that your products are becoming less price competitive. Your products, students, are you following me or not? Your products become less price, competitive because of the fact that their prices are higher relative to other products in the market, in the world, right? Exactly. So when your country's inflation rate is relatively higher compared to other countries, your product's price competitiveness is less, and therefore you will be able to export less. And therefore, you will be able to export less. Is it making sense? Students, is it making sense? Isha? Right? Because the price of government bonds technically doesn't have anything to do with the have to do with the inflation or anything, right? The price of government bonds has nothing to do. Okay, so is this all or you have more questions? If not, then we can do some paper for the remaining time. You still have like good 40 minutes. So do you have any more questions, Bob? If you have any questions. Right, okay. Which year you want me to do? Which year you want me to do? Okay. Two one. Let me check. 2-1 we haven't done. 2-1 I think we did the October November one. Not sure. So this is May June, right? May June 3-2. Marking scheme. These are all the marking scheme. Where's the question paper? Question paper 3-2. And let's say marking scheme for 3-2. And then you have question paper 3-2. And then you have marking scheme for just a second. This is summer 2021. And where's the winter? I mean, it's only the summers, right? October, November, we don't have. Oh, sorry, October, November, you have to give it today. Let's see if we have done this or not. Right. I think we haven't done it. But looking at the first question, I don't think we have done it. Right. So should we do this one? This is May, June 2021, 3-2. May 2021, 3-2. Right. Okay, let's get started then. Okay, let's read the first question. The question says, the diagram shows a monopolistically competitive firm. Which point represents allocative efficiency? So which point represents allocative efficiency? Yeah. So which point out of A, B, C, and D would represent allocative efficiency? C, right? Because where the price is equals to marginal cost, where the price is equals to marginal cost, that is allocative efficiency. So one is C, right? Is it making sense? So one is C. Very nice. Okay, next question. What is an argument against government intervention when there is when there is a market failure, right? What is an argument against government intervention when there is a market failure? Government intervention could increase positive externality. Government intervention could increase the availability of merit goods. Government intervention could lead to a less efficient outcome. Government intervention could reduce information failure. So what is an argument against government intervention when there's a market failure? So which of these statements show that the government should not intervene, right? Right? Is it making sense? It should be C because that is a negative statement, right? That's a negative statement, right? That's correct, right? So let's quickly check. So that should be C. Perfect. Very nice. Okay. A government is choosing between 4 routes for a new road. The table provides details of the cost and benefits associated with each route. The government wants to get the highest return for taxpayers in terms of the social benefit relative to private cost. Which route will the government choose? Right. So which route will the government choose? Best, highest return. The question says highest return. 15, 10, 20. Right. So which route should the government choose? Highest return. So they have already given you the definition of what they mean by the highest return. The government wants to get the highest return for taxpayers in terms of the social benefit relative to private cost. That's not correct, Arbab. I don't think so. Isha, what do you think? Read the statement again, the highlighted statement. The government wants to get the highest return for taxpayers in terms of the social benefit relative to private cost. So you are given private benefit, external benefit. You add private benefit and external benefit. What do you get? You get social benefit. And then you subtract private cost from that, you will get the highest return. So out of all these 1, 2, 3, 4 options, whichever option is giving you the greatest difference, that should be the answer. Should be B. Should be B. I also think it's B. 3 is C. Wow. 3 is C. 25 and 10 is 35, 15. 40 minus 25, 15. Whoa. 30 and 40. Cost is less. So B is also yielding a total profit of like total benefit of 15. And C is also doing that. 35 minus 20 is 15. The cost is the lowest. Oh, I get it. I get it. Cost is the lowest. And yeah, so think about this. If you add the first option, total benefit is 30. In this case, total benefit is 40. In this case, total benefit is 35. In this case, total benefit is 45, right? But then why did it choose C? C says that 35 minus 20 is 15. But even in option B, you are getting 40 minus 25. 15. Okay, I get it. So Isha and Bob, think about this. So why is B incorrect? The only explanation that could be true in this case is that even though you are getting a benefit of 15 in option B, how much is the benefit that you're getting, right? The net benefit. What do I mean by the net benefit? So social benefit minus private cost is your net benefit. So you're getting 15 million in case of B, 15 million in the case of C. But why is C the answer? Why is C the answer? Because here you're spending less of cost. So your less resources are being spent to produce it, right? It says the highest return to taxpayers in terms of social benefit related to private cost. So private cost should be lowest. Private cost should be lowest, right? Because if private cost is less, then it means that the government needs to take less in taxes from the citizens. The government needs to take less in taxes from the citizen. Students, did you get me? Bob and Nisha? So you have to see in which option is the return highest. And then if you have a tie between the two options, then you have to choose the one where the cost is relatively low. Right? Okay, next question. Where's 4? Okay. Donald maximizes utility when buying paperback books and audiobooks. The price of the paperback book is $3 and the price of audiobook is $6. Okay, I'll send you the new link. Don't worry. If the marginal utility of the last paperback book was 12 units of utility, what was the marginal utility of the last audiobook purchased? That should be simple. Audiobook. So 12 divided by 3 is 4. 4. So 6 4s are 24. Yeah. Do you guys remember the equimarginal principle? Students, do you remember the equimarginal principle? If you do remember the equimarginal principle, I'm giving you a hint. You have to apply the equimarginal principle. So apply the equimarginal principle, and then you will be able to calculate the answer. So marginal utility of A divided by price of A is equals to marginal utility of B divided by price of B. So there are two products, and you have the price of two products, and you have marginal utility of one of the products. So you can calculate the other thing. Easy. Arbab, did you also get 24? Is your answer also 24? Right? Right. So the answer should be D. Let's check. 4 is D. Perfect. Let's move on. Which statement correctly describes the result of a price increase for an inferior good? Which statement correctly describes the price increase of an inferior good? When price increases, okay, both the substitution and income effect cause the consumer to buy less of the good. Both the substitution and income effect. Price increase. The substitution effect causes the consumer to buy less of the good, and the income effect causes the consumer to buy more of the good. Interesting. What do you think? What do you think is the answer? What is an inferior good? Okay. When price increases, first tell me about the substitution effect. Isha, when price is increasing, what is the normal response? When something becomes more expensive, do you buy more of it or less of it? Right, exactly. Think about this. What is substitution effect? Substitution effect is simply the effect of, it's the effect that takes place due to change in price. Like if anything becomes more expensive, you buy less of that. You want to substitute it with cheaper products. So if something becomes more expensive, I want to buy less of it because it's becoming expensive now, right? So that is substitution effect. Now, why would the income effect say that you buy more of it? In the case of inferior good, why would the income effect of price increase would say that you buy more of the good? Because your real incomes are decreasing. When something becomes more expensive, the consumer's real incomes decrease. And when the real incomes decrease, We know that consumers buy of inferior good. Consumers buy more of inferior goods. So that's the whole reasoning behind it. So the whole reasoning behind this is that substitution effect is directly like it's just about the law of demand. Substitution effect is just related to the law of demand. Higher price, you buy less of it. Lower price, you buy more of it. So when the price is increasing for inferior good, obviously the substitution effect would say that you buy less of it. As simple as that. But on the other hand, income effect for inferior good works in the opposite direction. So when your real purchasing power decreases, and how do we know your real purchasing power is decreasing, Arbab? How do we know that your purchasing power is decreasing? Who can tell me? Because when price increase, what happens? With the same income, when one of the two products become more expensive, with the same income, now you can buy less. When you can buy less, what happens? Your purchasing power is less, so you would want to buy more of the cheaper goods, right? So inferior goods are bought more when incomes increase due to income effect. So 5 should be C. 5 is C. Easy. Which statement about a monopoly is correct? Profit maximization occurs when average cost equals average revenue. Sales revenue maximization. Okay, sales maximization occurs when the marginal cost equals marginal revenue. Sales revenue maximization occurs when marginal revenue is equals to 0. Right. See, so we have just discussed this, right? So, Arbab, do let me know if you're getting these questions or not. Did you get the question C? Did you get question C? So at what point your sales revenue are maximized? Your sales revenue is maximized when your marginal revenue is 0. So when your marginal revenue touches the x-axis, that is where your think about it. So how do you make the graph for a monopoly, right? So you just make this curve and then you have the demand curve that is steep one like this, and to the left of that lies your marginal revenue. Sorry about that. And to the left of that lies your marginal revenue. So when your marginal revenue touches the x-axis, that means that each additional unit is giving you 0. Each additional unit of the good is giving you 0 revenue. Yes or no? Right? And this was your average revenue, which is also called the demand curve. So when your marginal revenue touches 0, that is the point when your total revenue is maximized. That is the point when your total revenue is maximized, right? Got it? Okay. A satellite communications company is bought by an investment bank. What outcome has resulted from this purchase? A satellite communications company is bought by an investment bank. Which outcome has resulted from this purchase? A cartel, lateral integration, vertical integration, diversification. Investment bank and a communication company. Is there anything common between the two? Investment bank and a communication company. Is there anything common? Nothing. So what should be the answer? Students, what should be the answer then? So when the two companies are completely indifferent, what is lateral integration? Lateral integration is horizontal integration. Lateral integration is horizontal when the same businesses is the term that describes the action of merging two companies that deal in the sale of similar goods within one market branch. So lateral is the horizontal integration that we have studied. Isha, are you getting me? Then it should be B. Bob, did you get this? It's B, diversification, which we also called as conglomerate. So what is conglomerate? Conglomerate is when two unrelated businesses merge with each other. That is diversification. Whereas lateral integration means horizontal integration when they are two similar businesses like Careem and Uber. right? When Careem and Uber, that's lateral integration. So for question B, the answer, sorry, question 7, the answer should be B, right? The answer is B. Okay. Now, the next question says the diagram shows the long run average cost for a curve for a firm and 3 short run average cost curves. Short run average cost curves. Which statement is correct? Let me send you the new link. The meeting is about to end. I'm sending you the new link. Stay close towards your phone.